Rally around small business.
Rally around small business.
Here we are. So thank you for everyone joining. This is Jeff Herman from the Business Journal, and we are thrilled to be hosting the team today at HD Davis CPAs and Wycliffe Payroll on updates in response to COVID-19 with our focus on PPP, EIDL, and unemployment claims.
Today we want to talk about some updates since we had our last webinar, and after actually implementing the processes and helping our clients out in real time, and just kind of go through those. We are going to be talking about the PPP loan and updates there. We're going to basically break down the actual application itself and what it looks like, information that you'll need, what to do next. So once you get the funding, what are you to do? Best practices there, and then also do some examples for the loan forgiveness portion and calculating those. Marcy's going to walk us through step-by-step for the EIDL loan and also give us some new updates on unemployment. Before we get into it, I know this has been a question from a lot of people, so I just wanted to throw this out there that for those of you who haven't filed 2018 or 2019 taxes because you didn't have to, so if you were under that standard deduction or you don't get Social Security income, there is now this webpage on the IRS website, which I believe just went up today. If it wasn't today, it must have been yesterday. But in either case, this website is now available. You would just go to irs.gov/coronavirus and then look for this economic impact payment section, and you can go ahead and put your information in there if you were to qualify for the stimulus checks otherwise. So if you didn't file because you didn't have to and your information is not out there, you can go here and do that. Also, if you want to update your bank information, you can go here and do that as well. Just keep in mind that the website might be kind of slow just because of the overload of people going there right now. All right, so just jumping right into this portion, we wanted to let you know of the lenders in our area that do offer the loan. So we've got them listed here, although some of them are no longer accepting applications just because of the amount that we're seeing. But, and it's important to know that these funds are being used quickly. Things are changing by the day, so that we're not discouraging you from applying. We still would like for you to do so if you had intended to, and if you think it would benefit you and it works for your business. So again, if you haven't, just get the ball moving as soon as possible. If you are not sure of a lender that is in your area, or maybe you work with a bank who doesn't offer the loan, we just advise you to check the SBA website for lenders in your area, and maybe just call around and see, if any of them would be willing to work with you if you don't have a relationship already established with one of these lenders. So these are newer updates that we wanted to bring to your attention. The covered period for the PPP loan starts the date the first loan disbursement is received. So initially it was the date of the origination of the loan, and we want to specify that it's when you actually get that first disbursement in your bank account, or when you receive that, then your 8-week covered period starts. And again, before I even go through all of these, if you've submitted an application prior to any of these changes, as long as you did your application based on the knowledge that you had at the time and what was available to you and made known to you, you should be good as long as you basically did that in good faith. So I just wanted to throw that out there as well. But moving on, so for the second bullet point here, the calculation, once again, of the maximum loan amount is the lesser of your average monthly payroll cost incurred in the 1-year period prior to the loan date, which can either be 2019 or it can be the trailing 12 months prior to your application. Both are acceptable periods, but your lender may require you to do one or the other. So you'll want to check with them, but it would be the lesser of your average monthly payroll cost in that 1 year period prior to, times 2.5, and then that would be, of course, taking into consideration anything outstanding or applicable from the EIDL loan, and then if it's less than 10 million. So whatever is the lesser amount. One thing that was in the original wording that was a little misleading was in regards to the independent contractor payments. So payments to independent contractors do not qualify as payroll costs for the PPP loan. What they meant by this is the business entity paying out to the independent contractors cannot use those as their payroll costs. But those independent contractors, 1099ers who are receiving the payments, they can qualify, and that's where that separate application kind of comes into play. So I think it was intended to say that those types of people, those types of entities can apply for the PPP loan, but their calculation is a little different, which we get into later. So just remember that payments to these independent contractors don't count towards payroll costs. Another thing is that payroll costs don't include taxes, federal payroll taxes and employee withholding during the covered period, which is that 8-week period from February 15th through June 30th. This is basically for those who would use the trailing 12 months as part of their calculation. Also, not more than 25% of your loan forgiveness amount may be attributed to non-payroll costs. So at least 75% of your loan forgiveness must be for your payroll. And again, this is to ensure that the primary purpose of this loan is to help businesses maintain their employees. It's the Paycheck Protection Program. So 75%, at least 75% has to be for payroll costs. And again, we're going to get into some examples and such in a little bit here. The payback period is 2 years, not 10, which is what we originally were given, and it's at an interest rate of 1%. One thing also, you want to check the U.S. Treasury website because they do update their frequently asked questions very often. So it very well may be that you have a question and it's answered there as they become available. So this is the final PPP application. It's for all types of businesses, which we'll see here on the next slide when I get into a little bit deeper. Just about every bank wants a monthly payroll summary. So if you have a spreadsheet of some sort, we do for our clients, something like that when we're working with them. Your lender will tell you what you need. So just make sure you're staying in touch with them and keeping up to date with their specifics. Once the bank will have 10 days after the loan is accepted to make that first disbursement to you. Then again, your 8-week period starts. So it's better to, apply ASAP, especially with everything now with where we are with the loans. Just do it now, and it's better to just, not have as much forgiven if you're not sure than to just wait altogether. But let's break down the application, just the first page, so you can see. So again, it's for all types of businesses that would qualify. So you've got your sole proprietors, partnerships, corporations, and such. It's pretty self-explanatory for the top part. Then you get into your average monthly payroll calculation, which we will have an example a little bit later of the forgiveness portion too. But again, it's, you're doing that calculation here, your number of employees, and then for the purpose of the loan, if you have employee health insurance, what we've been doing is putting it under that other box and just putting it as an explanation. But, just check with your lenders as far as, like for the owners at the bottom there. Some may require all owners of the business to sign off on this. Some may require only one of the business owners to be the representative. So just be aware and maybe be prepared to have all owners sign off, but again, just check with your lender. And then this is the second part of the first page of the PPP loan. you're just going to want to answer these questions. If you answer yes to 5 or 6, then the loan will not be approved. So just keep that in mind. And then number 7 was actually updated from the initial version, which had some discrepancy with it as far as if you had maybe like a foreign owner. So now it's reworded to clarify that as long as all of your employees reside in the United States, then you can still apply, even if one of the owners is foreign. Okay, so this one is a little bit more confusing, but a lot of you were wondering if you can still apply if you're self-employed and you don't have payroll costs. Yes, the answer is yes, you can apply if you don't have payroll costs. The process should be about the same. You're going to need to provide different documentation, but again, I keep saying it, you're going to want to check with your lender just to make sure you're covering your bases. But the way you're going to calculate this is your average monthly payroll would be 1/12 of what you reported as net income on your 2019 Schedule C. So if you haven't filed 2019, it's important that you calculate this amount and file your 2019 so that you have the amount and it's filed on record. This is regardless if you have payroll costs or not. So that's your starting point. If the amount is over $100,000 though, then you have to reduce it to that $100,000. If it's 0 or less, then you don't qualify. So for example, if you have $24,000 net on your Schedule C, then your eligible payroll protection program loan itself would be that $24,000 divided by the 12, which would get you $2,000. And then you're going to multiply that by that 2.5, which is $5,000. If you don't have payroll costs, then the maximum that would be forgivable would just be basically decreased because you don't have payroll. If you do have payroll, then there's another calculation that would help you increase your maximum forgivable portion there. So I hope that that clarifies that in its simplest way, in its simplest form. I know that there's more to this, and we'll have questions, but at least yes, you can apply if you don't have payroll costs.
I'm going to add something to that. We got yesterday, there were some additional guidance given to us by the SBA. Again, Ange mentioned that the United States Treasury updates frequently their clarifications on a day-by-day basis. So yesterday they posted some updates for the self-employed group. A couple of things to consider. Number one, they gave us some clarification on partnership draws, such as guaranteed payments. Those guaranteed payments can now be included in this calculation, and partners should not submit separate loan applications from the partnership. The partnership will submit the loan application, and then the guaranteed payments that would be made to those partners would be included in payroll costs. In addition, they've made mention with not a ton of clarity that if you apply for the payroll protection loan, you may not be eligible for unemployment benefits for the self-employed when that portal becomes available next month. I think that's something big to consider because for some of the smaller self-employed folks, you need to weigh the benefits of potentially losing out on the unemployment benefits versus getting the payroll protection loan. So something to pay attention to and continue monitoring. But for now, that's the clarification that we've received in regards to that. It's still a little vague, but it does kind of make us believe that if you're a sole prop, if you're a Schedule C filer, if you're kind of a one-man operation, or and you're getting a 1099 every year, it's probably best for you to hang tight or consider what you would be losing out on unemployment benefits before making an application for one of these payroll protection loans.
Tim, I have a question I've received over the past couple of days. What if you're a member of multiple entities? So say you are in partnership with 4 people in one entity and on your own or with one person on a separate entity.
Yep.
can that one individual file on both sides, even if you're part of those? Is it entity driven?
Yeah, so it's based off of federal tax ID numbers. So you can apply for a payroll protection loan within a variety of different companies.
All right, so now we're going to get into the loan forgiveness portion, which this section is very important. You have to specifically request loan forgiveness, which is another process. The loan forgiveness can be up to the full principal amount. It's very important that you're keeping detailed, separate records for this loan. And we're advising everyone to make sure that you're not just cutting the checks, that they're clearing the bank account. So just to be on the safe side. So it's better to be safe than sorry within that 8-week period that these checks are cashed and out the door and we know that they're good. All right, so you're going to owe if any of these apply. So if you don't use the loan over the 8 weeks after that first disbursement for payroll costs, mortgage interest, rent, and utilities. If you decrease your full-time employee headcount during the covered period, if you decrease salaries and wages by more than 25% for any employee who made less than $100,000 annualized in 2019 during the covered period, if you don't restore your full-time employment and salary levels by June 30th of this year, and if you received up to $10,000 in that emergency advance from the EIDL. So it's important to note that closing date so that when you're getting that first disbursement, are you ready to go back to work full force? One of our clients got approved on April 9th, and then their money, that first loan disbursement was in their account the same day, and then that 8-week period started. So, it's important to note you got to get your employees back to work, whether you're training them, they're cleaning, just being productive and getting the ball moving there because you want to maximize this 8-week period for your loan forgiveness. So if your clients have the same employees and they are paying them the same amount, then they will have 100% forgiveness. So that might apply to you, and maybe just clear it up, just thinking of it like that. There will be more information we hope to come out on this part, but again, it's important to just be proactive and keep those detailed records, which we'll get into here in a little bit. And just as a reminder, forgivable costs for all recipients of the PPP loan, whether you're self-employed or not, include these. 2 things, and one of them Tim mentioned, are the guaranteed payments to partners, and then also owner compensation for Schedule C filers, but it's limited to 8 weeks worth of your 2019 net profit. So those are 2 new things that came out with this new guidance. Also, if you have sick and family leave under the FFCRA, those are not covered with this payroll cost, just as a reminder. And they also don't include payroll for those who reside outside of the United States, principally reside out there. And then if you have an employee in excess of an annual salary of $100,000 prorated for the covered period, those aren't covered as well. But you can see that interest, rent, utilities are all there for forgivable costs. Utilities as they are written now include electricity, gas, water, transportation, telephone, and internet services before February 15th of 2020. February 15th is kind of like the key date throughout a lot of this. So you just want to make sure that you keep that in mind as you're going through this, but just keep documents, keep your records, and separate them amongst what might be your typical day-to-day routine. Again, visit the Treasury website if you have more questions on this. So we wanted to provide you with a visual example if you got the loan. So hypothetically, say you got your loan on April 23rd, which we have in red dots there. If you get it there, but you're paying your employees bi-weekly every Friday, and we have those in the black circles there, you're going to see that the last week of your 8-week period wouldn't have included that pay date on June 12th. So you're going to want to structure things maybe a little differently and pay your employees, again, to maximize this forgiveness amount as much as possible. If you're paying your employees a bonus, throw that in this 8-week period. Just be strategic about it and work closely with your accountant and see, the best way of how to handle this. Work with your payroll provider and see what you can do to maximize this amount. And now that we're going to go through a couple examples. Tim, I know you were going to go through these for the forgiveness portion.
Would you like to?
Go ahead, Jeff.
Well, we have several good questions coming across the Q&A. Would you like to handle those after we review the worksheet?
Yeah, I think some of these questions will get answered as we go through this process, because there are a couple of different layers to consider in all of this. So it's important to kind of see it in action. To me, I'm always kind of I learned by going through an example because it's easier to see some of these pieces come together that way. So for this example, we're gonna try to use some pretty straightforward numbers. So let's assume that that today you woke up this morning and there was an extra $1 million in your business bank account. Hooray! So book your trip to the nicest island you can find, and see you later. I'll be waiting for my invitation. So if you decided to stay in the country here and use these money for payroll proceeds, then you got $1 million, which means that the first 250,000 of it can be used for rent, utilities, mortgage interest, and those types of mentioned items. So the first step here is that you've got a potential loan forgiveness amount of $1 million. All right. So the first reduction would apply for, let's say someone got a loan for $1 million, and then for whatever reason they got really busy the day after, and they were not only able to hire all their original people back, but they were able to hire more people back, and they spent $1.2 million in the following 8 weeks on payroll. The only amount that you can get forgiven, obviously, is the $1 million. So it starts with that point. The baseline will always be the $1 million, regardless of what you spend over the coming 8 weeks. So the next step is where I think we're getting a lot of questions, and these two reductions will still leave some areas that we will require a little bit of clarity, but we'll give you our best interpretation of the law as it stands today. So let's say in this example, you have a choice. You have the ability to use one of two periods for your full-time equivalent calculation. And if you're looking at this from, the elementary arithmetic days, you want the smaller number of the two, because this is going to be your denominator to come up with your percentage that you will determine what is potentially forgivable after this equation. So you're going to look at your full-time equivalents per pay period from either February 15th, 2019 to June 30th, 2019, or January 1st, 2020 to February 29th, 2020. Now, there was a question about how do you calculate full-time equivalents? The only definition of full-time equivalents in determining the calculation that we have available to us is what was given in the healthcare reform a few years ago. So right now, what we're encouraging people to use is 30 hours, a 30-hour work week. But the most important thing that you do here is that you use the same method of calculation in your base period and then in your tracking period. And the tracking period that I'm gonna refer to is the 8-week period after you get the money. So if in your base period you use 30 hours, then you want to use 30 hours obviously in your tracking period. In your base period, if you use 40 hours, you want to use 40 hours in your tracking period. They haven't given us a specific guideline in terms of how exactly that needs to be done, but I think it's safe to say that as long as you're using the same methodology in both periods, then you're going to come up with the same fraction, right? So in this example, I wanted to make sure that we had two kind of extremes covered in our example. So with this one, we're saying that in both of your periods, in both of your base periods, you had 100 full-time equivalent employees, okay? To keep the math as simple as possible here. And then during your tracking period, you went down to 50 employees. So over that 8-week period of time, you went down to 50, you laid people off, you went down to 50 employees, but you still managed to spend the entire $1 million. Let's say that you had 100 employees, you cut it back to 50, and you doubled everybody's pay because everybody was still coming to work through all of this, and you called it hazard pay or whatever. If that were the case for you in this specific example, you still spent the entire $1 million, but you didn't get back to your full-time equivalent count. So the only amount that's going to be forgivable is going to be $500,000. So the guidance at this point that we're being given is, and we'll go to the next slide so I can illustrate this. They give you an out. They give you a June 30th out date, we'll call it. So in this exact same example, you cut back to 50 employees. Your average payroll period was 50 employees during that 8-week period of time. But on June 30th, you had hired back all of your 100 people. You didn't hire them throughout the 8-week period, but by June 30th, you've made the adjustment, you've hired everyone back, and you've returned them to their full rates of pay. Then that $500,000 no longer becomes an adjustment. Your entire loan forgiveness is $1 million. So that's the most important part of this to consider, is that there's going to be a lot of tracking and a lot of information that you're going to have to go through over the 8 weeks after you get this loan money. The target still has to be June 30th to get everybody back to work. What I don't know at this point is what specific documentation or requirement you're going to have to come up with to prove to the bank that everybody's back to work on June 30th. That's going to be the area that's going to require some additional proof, additional documentation that they may require after June 30th to start to track that and monitor it after that period of time. We're not super sure as to how they're going to come up with what specifically they're going to require of people. So I want to, after this, I think, maybe we should go through some of those questions so that we can compare them against the example that we've got here. So is there anything here, Jeff, that you see that we didn't answer in that? Okay, so Gino's asked us, if you hire your people right back before June 30th, then what was the requirement for the $500,000? So they tell us, if, again, in this example, we've spent the entire $1 million. That's the important thing to hammer home, is that we've used the entire $1 million loan, but we weren't able to get back to that full head count, that full-time equivalent count, until June 30th. So as long as you have hired back your full workforce by June 30th, and full workforce means the full-time equivalent count is back to where it was in those base periods, and you're paying them the same amount of money that you were paying them in those base periods, then you'll have the entire loan forgiven.
And that's the count, not the individual, correct? The count is what matters.
The full-time equivalent count.
Okay, perfect.
So, and then the third reduction that we didn't include in the example is the decrease in average monthly pay. So this one is where things get really crazy, in my opinion. From a tracking standpoint, from a documentation standpoint, this is where the waters start to get a little bit muddy, because they're telling us that you're going to compare the first 3 months. So we're going to go January, February, March, and we're going to look at your entire group of employees, and we're going to see what each of them made on a monthly basis. And if during your 8-week period of time, you reduce any of those employees' pay by more than 25%, you're going to have a reduction in your forgivable debt. The question that we have, and we don't have any clarity on, is what happens in a scenario where someone quits after March 31st, or someone won't come back to work after they've been laid off and now they're collecting unemployment and they refuse to come back to work. So again, I think that the clarification that we'll get will probably be specific to this reduction, but all of this comes back to the same subjective question on June 30th. Is everyone back to work, and are you paying them the amount of money that you were paying them in your measurement period? If you can answer yes to both of those questions, then neither of these reductions really matter. So that's the most important part for everyone, is that even if you don't get back to the full workforce during the 8 weeks, as long as by June 30th you get to that point, then the reductions are null.
Right, and a further question. So is it, Joe, Bobby, and Sue, or is it employee 1, employee 2, employee 3? We keep getting that question. Yeah,
that's the good question. That's the one that we need an answer to. Right now, we are assuming that it's Joe, Bobby, and Sue, and it's not necessarily employee 1, 2, and 3. And what we might see is we may see people, different banks interpret that role differently. We might see people allow them and do it by position or job title or whatever, but I can assure you that most businesses don't have positions and job titles and whatever. It's going to be employees 1 through 50, and that's going to be the calculation. I think the important part, again, is that if you feel confident that you've gotten back to your workforce at June 30th, I think that's the most important part. And I think that if I'm reading in between the lines here, I'm reading that the average monthly pay reduction is going to be applicable for those that went out and said, what we're doing as a result of this is we're not going to lay people off, we're just going to cut everybody's pay. So I think that specific section will be specifically driven towards those situations, and not so much in the situation where someone quits and refuses to come back, or someone gets laid off and refuses to come back. So I think that as long as you get back to that number, if we're trying to look at the intention of the law, because there were a lot of questions from out of the gates about what was and wasn't included in payroll costs and so on and so forth. They have been very good thus far about returning to what the intention of the law was. And the intention of the law was to encourage people to get back to their full workforce as soon as possible. So I don't envision there being a scenario where there's going to be a ton of forgiveness that is not allowed because things happen that were completely outside of your control, like somebody wouldn't come back to work. But again, there's still questions yet to be answered, and we're still waiting for some of that information. But the most important thing that I can tell people is it's important that from the time that you get this money, you better start tracking your forgiveness. You better start looking at these calculations right out of the gates, because it's going to be insanely important. That 8 weeks is going to go by so fast. You're going to get to the end of it and you're going to be like, well, what do I have left? Or is there something that I need to do differently? Or is there something that, I should have been doing along the way? So right out of the gates, it's important for you to kind of get with your advisor, get with your CPA, and start to build these types of systems out so that you can be tracking this information. To me, the most important part when we were applying for the loans was getting your application in with the closest to accurate number that you can have. Now's the time to get granular. Now's the time to really be looking at those unemployment expenses and the health insurance costs and your benefits and all the things that can potentially be includable in forgiveness. The better methodology here was to, number one, get your application in and get your money. And then number two, try to get the most of that money forgiven as it relates to your company and within the confines of the law. So now's the time to really start to comb through those expenses, see what's applicable, and create your folder of information that you're going to keep and start to pile things in of money that you've spent over that 8-week period of time. So I think we've got another slide on this.
Yep.
Okay, so we're encouraging a lot of our clients to treat this as if anyone's built a home and has had a construction loan, this is the most comparable thing that I can tell people is if you go out and you get a $500,000 loan to build a house, they don't just give you a check for $500,000. You have to continue to produce the invoices and the information to continue taking draws on that loan. So you're going to get all the money right away from the payroll protection loan. Once you're approved and they put the money in your account, they're not going to dole it out to you in draws. They're going to just dump that money into your bank account. And you're going to have to internally treat that as a construction loan. So you're going to have to look and say, okay, well, I transferred $100,000 from our savings account where the payroll protection money is into our operating account. And here's how we spent that $100,000. Here's the payroll journal, and here's the health insurance invoice, and here's the utility bill, and here's the rent and things like that. So it's important that, we encourage people to document. This is the time where you cannot over document this process. It's also important that you use the funds only for the allowable uses. So even if you get past that 8-week period of time, you can still use the money. You just have to continue using it on those allowable uses, your payroll, your rent, your utilities, your mortgage interest. Working closely with your professionals is more important now more than ever. You hire people for this reason. You hire people that are, reading through this documentation and working with the banks and making sure that you can maximize this forgivable amount. Again, within the confines of the law. Now's the time to be looking for other savings under the CARES Act to start to kind of explore what business is going to look like from here on out. So what are the other tax credits that may or may not be available to you? How can you continue to adapt your business, and are there tax credits available to you? And then as you get the information, it's better to look at what that application for loan forgiveness is going to look like sooner rather than later. Again, so that you can take that process that you're going to have to apply for the loan forgiveness and use it as you're tracking your spend of those dollars over the course of the next 8 weeks. At this stage in the game, that application for loan forgiveness is not available. As a lot of the things that we've gone through, were the first day that you could submit applications, they were still working out the applications. I don't envision that we're going to be in a position where it's going to be 8 weeks from now before we have some of this clarification. But I do believe that's going to be important to continue to have those conversations with your bank to find out what's your process like for loan forgiveness. What's the kind of things that I need to be collecting now rather than trying to scramble and do it later. Especially now, while some of you may have a little bit more time, more availability because you're not quite at full capacity. Build those processes now while the numbers are smaller and while the volume is less crazy, because it'll make things much easier when it comes time to submit those loan applications for forgiveness later. And we don't know what those confines of time will be at that point in time. We don't know if they're going to give you 30 days to submit that application for forgiveness. We don't know if they're going to give you a 5, 10, that's an unknown. I'm sure it'll be a reasonable amount of time, but it's going to be a lot of information. You want to make sure that you've compiled the most accurate and detailed list so that you can get as much forgiven. So this was our fun statistic, right? And we pulled this from the most credible source, which is the Business Journal. There was just shy of 1 million loans worth $232 billion were allocated as of yesterday. Remember, there are $350 billion that were allocated to this fund. So the clock is quite literally ticking. At this point, there has been no specific congressional act that has expanded the fund. There has been a ton of mention about it. There's been a ton of people saying that they want to do it, but it hasn't happened yet. So what we're encouraging our clients to do, even if you haven't submitted your application yet, do it now. Get in line. If they do expand that cap, you want to make sure that you're in sooner rather than later. So the money is going quick. I'm going to grab a couple of questions here.
Yeah, good questions. Good. I mean, Tim, this is really valuable information. A quick one, uh, documentation I think is the key, but if one of your employees declined to return to work, can they show that they at least offered them the opportunity, but they declined because they'd rather sit on unemployment?
Yeah, I think what's important here again is documentation. Maybe making those offers via mail, via email, via something that you have proof that you made those offers of employment back. I think that there is again no situation where I would say that you can over document the next 8 weeks, especially when it comes to these types of sums of money and then forgiving this amount of money. If you give someone an offer to get their job back and they don't take it, you want to have proof of that, just in case. Not really sure exactly how that will work into the whole calculation, but I think that would be important to have that information available when the time comes.
I think then on the opposite side of that same question, what if you have someone that you're having performance issues with, and you had an intention of rectifying that performance issue through termination, but you now can't terminate them unless it's documented, correct? And this gets into company culture, but easily at least 30 to 60 days of, we had a conversation, these goals and objectives were not met. Here are the ways to rectify the situation. You have 30 days to fix the situation. Boom, here comes a 30. So is that what you would recommend, even if you wanted to exit someone out for performance reasons?
Yeah, I mean, I think now more than ever, especially in the age that we live in terms of lawsuits and lawyers and everything like that, having a strong HR policy and following good guidelines is more important now than ever, as it relates to wrongful termination lawsuits and those types of things. But also in regards to this, again, we were not certain how some of those things will impact your loan forgiveness if you do need to let someone go and then consequently replace them with someone else for your forgiveness calculation. And those are considerations you'll have to make. You'll have to look at this thing and say, okay, well, there are some unknowns, and for those folks that are getting the money quickly, it's going to put them into some difficult decisions in terms of laying people off that they were going to lay off, not necessarily for virus-related things, but maybe production-related things. So again, documenting that process and working closely with your HR professionals will be more important now than ever.
Okay. And we have Gino here with a couple of good questions. 30 or 40 hours per week for a full-time employee matters. If I use 30 and they later tell me it's 40 for FTEs, then how would I be able to make up the other 10 hours per week?
Yeah, so it's important that it's not going to be based off of the actual full-time employee. It's going to be based off of the ratio of full-time equivalents in the 8-week period versus the full-time equivalents in your measurement period, in your base period. So that's why I'm saying that 30 and 40 doesn't matter as long as you're using the same amount in both. As long as you're using 30 in that calculation on both sides of the equation, the fraction will return the same value in the end. I would encourage people to use 30 just because that's the only thing that's available to us in terms of any other documentation that's been given for what a full-time equivalent actually is.
Okay. Question around seasonal businesses. What if they're wrapped up by April and they just typically keep one employee around? Do they still determine the average as of the 1/12 of the yearly pay? I think this is a unique question, would probably be handled best offline.
Yeah, seasonality is undoubtedly unique. We've gone through a couple of these within our firm. Both the calculation of the max loan and the calculation of the forgiveness are going to be a little bit more unique for the seasonal employers. So that would be a situation where I would encourage you to sit down with your CPA and look at your specific business as it applies. This is the general concept as to how the forgiveness will be calculated. When it comes time for applying these roles to your specific business and the timing in which the business happens will be important. I think that one of the other big items that we are closely monitoring is for businesses like restaurants. The hospitality industry has really gotten shortchanged in regards to how the loan forgiveness will work. If one of those restaurants and or hotels or someone in that industry applied for one of these loans and they get the money this week, it's going to be difficult to spend the first 2 weeks of that money because they can't open their business, at least not to full capacity. And I've had a ton of conversations with a lot of restaurant owners that have said, even when things go back, even if we're able to open, let's say May, let's say restaurants are able to open sit-down restaurants in May, it's likely that they're going to be under the confines of social distancing. It's likely that they're going to be under the confines of your tables have to be 6 feet apart. We did an analysis with one of our restaurant clients where we looked at what the total capacity would be if they complied with the 6 feet distancing with their tables and booths and things like that. And they went around, they moved everything, they measured it all out, and they said they lost almost 60% of their total capacity by complying with those distancing rules. So we're really hoping that the lobbying groups that surround the restaurants do a good job of trying to get some type of extension of that monitoring period or some different qualifications that will specifically apply to them, because it's going to be impossible for them to get the true intention of this loan forgiveness under the current circumstances.
Another quick one you can answer. What if you've applied through your own bank and you haven't heard anything, but there's another bank that's more aggressive and they're after you to go through them? What do you do?
What's important through all this to remember is that when you apply doesn't necessarily mean that your application has been submitted to the SBA. Okay. There was a lot of confusion initially in the first couple of days that people said, yeah, I applied. It was easy. It took 10 minutes. Yeah. Just sending the application into the bank does not mean that you are submitted to the SBA. There have been banks that are still inputting these applications from the first week the first few days that they were able to take applications. They're still catching up and getting them into the SBA system. Once you're into the SBA system, it processes in there. And that's the key component here to answer the question, is that if you're already in the SBA system, you cannot go and apply somewhere else. It will likely jam up your initial application or cause a problem, because one of the qualifiers when you're submitting your application is that you haven't submitted one already and you don't have a loan in process. So it would be extremely important to get that clarity. If you've given your application to one bank, find out from them, did you submit it to the SBA? Did you put it through the E-Tran system? Did you give it to your SBA loan processing third-party company if they don't do it internally? If the answer to that is no, then sure, you can go to another bank if they're being more aggressive about trying to get you some answers. I don't know of a ton of banks right now that are really aggressively pursuing these right now. Most banks are so overwhelmed with the volume of applications that they receive. There's not a ton of banks that are, dragging people in off the streets to get these applications submitted. But
no, that's good advice. Absolutely. Okay. Does the entire loan amount need to be used over the 8-week period to receive forgiveness, or what if you haven't totally used the amount? What do you do in that? Do you try to spend it, or? Yeah.
So I suppose there's two answers to that question. Number one, if you received $1 million and in the 8-week period of time you only spent half of it, let's say you spent $500,000, then your base amount that is potentially forgivable is $500,000. You still have the $1 million. You still have the other $500,000 sitting in your checking account. You can keep that money as long as you use that money for the eligible expenses. Now, after the 8 weeks, none of those things are potentially forgivable. And after then what happens is it turns out, again, based off of whatever, after the structure for this is the first 6 months, there's no payments. After the first 8 weeks, you're going to determine what your forgivable amount is. After 6 months, what's going to happen is whatever's left, whatever has not been forgiven, is going to term out over the remaining year and a half at 1% interest. And you're going to be given some type of a payment schedule to pay off whatever your unforgiven balance is after 6 months in monthly payment increments to get paid off after that 2-year period of time. That's how we've seen most of the promissory notes getting drawn up with the banks.
Mm-hmm. Okay. All right. Well, in the essence of time, let's keep moving through because we're now moving into the EIDL application process.
And I think the Marcy will go through this one relatively fast. This has been amazingly streamlined from the first. We did one of these applications. Marcy and when somebody else on our team did one of these applications the first day that they were available, and it was, I don't know, Marcy, was it 5, 6, 7 hours that you guys had into that thing?
Easily, yeah.
And now it's 15, 20 minutes.
Okay, so I'm going to go ahead and pretty fastly go through this. You can go to this website right here, and it starts you with the application. And something I want to add before I do blow through these slides is, excuse me, that we actually put this together in a PowerPoint, so you'll see our contact information at the end. If you want that PowerPoint, feel free to shoot me an email and I can send that over to you so you can look at this and say, hey, this is what I need to gather before we get started. So just a few housekeeping items. This is the website that you go to. This one is a little bit different than the PPP. When you apply, you are going directly to the SBA to apply. So once it's received, it's received. Something to include in this is the $10,000 advance that a lot of people have maybe already applied for or have heard about. There's now a box at the end of the application that you can just go ahead and apply for that. You put in your bank account information. I will go through that, but I do want to let you know that you're not automatically guaranteed $10,000. It's up to $10,000, and it's based on your number of employees. So they're calling it $1,000 per employee up to 10. So just to keep that in mind. Next slide. So this is what it'll look like when you get started. Right there, streamlined process requirements. Thankfully, because that's about 7 hours I'll never get back. Not that there's a whole lot to do, but we want this process to be as easy as it can be for everybody involved. So next slide. So this one's pretty self-explanatory. You choose the one that applies to you. Next slide. Again, pretty self-explanatory, much like the PPP or any loan that you may have gone after. They're going to ask you questions like this. Next slide. Again, this is pretty self-explanatory. You should have all of this information pretty readily available, probably on your tax return or in your files. Next slide. This one is a little bit more touchy. You see the asterisks, those are the ones you have to answer. Your gross revenues, your cost of goods sold, we're advising people to grab that from your tax return. If you don't have your 2019 tax return done, it's in your best interest to get that done and use the numbers that you would use. So just something to keep in mind that you can pull it from your books, but it's likely going to need to be shown on your tax return. So if you haven't already done that due to the deadline, you likely want to contact your CPA and get that done. And just one other note about subcontractors when it comes to cost of goods sold, that again, you'll want to use the numbers that you would use for your 2019 tax return. And if your subcontractors are not included in your books, you'll want to compute that manual calculation like you would for your tax return. So again, it's best to consult your CPA if you don't have your 2019 tax return done. Next slide. So again, this is pretty self-explanatory, all the general information. Next slide. So this goes into another process about the business owners. Next slide, please. So this is about each owner. So it is in your best interest to list every owner, and it does ask you the percentage as you see ownership percent. Again, everything with an asterisk has to be answered. Next slide. And then you see, you just click add additional owner, and then you just repeat that step for however many owners that you have, and then you can hit next. Go ahead. So again, it will ask you these questions, and then if you answer yes, you will be disqualified. Next slide. And then if someone is helping you with the application, whether they're just helping you to help or they charged you, you would enter that information here. Next slide. This is where the $10,000 advance comes into play. So we've heard that it will just be directly deposited into your account. So it's pretty simple. You just click the box, put in the information. Next slide. So this is just kind of one of those things you have to go through the process. Next slide. And then you're done. It's really that easy. A client that I had been helping that took several hours, and then, you know, we had to redo it. It took me about 20 minutes. I had all the information readily available, but again, you can pull most of this stuff from your 2019 tax return. When the last time that I submitted one, they said that you would hear within a week. I will be honest, it's been a week and that client has not heard anything. So it all has to do with timelines. So they won't email you when you submit. You'll get a confirmation number. So it's important to keep that confirmation number handy. And then they will send you an email once they process the application. So next slide. Is there any questions related to the EIDL? Again, it's been very streamlined. Okay, so someone did just say that they just submitted one and now the wait time is up to 10 days. So again, it's going to vary based on when you do submit.
The other unknown as far as the EIDL is how they calculate the EIDL loan amount. We know how they calculate the advance, the $10,000 advance. Obviously, it's $1,000 per employee, up to $10,000. The actual loan amount is odd though. So right now, the way that this works is when you submit your application, you're just telling them what your gross revenue is and your cost of goods sold. So they are doing their own determination of what you would then be eligible for. And we've yet to see one of those come back, even the ones that we applied for early. We do know from everything that we've read that the EIDL appears to be heavily oversubscribed. So I think that they may be recalculating what people would potentially be eligible for, but I'd venture to guess that it's a similar calculation. I'd venture to guess that the EIDL is going to be based off of, you know, a month or two of what maybe what they determine that you would need to continue running your operation. So that's why I'm assuming that they're asking you for your gross income and your cost of goods sold so they can determine what a good number is to give you. Gino asked if you have no employees, you can't apply for the EIDL. No, that's not necessarily the case. You don't necessarily have, and that's why the EIDL is typically better for those that don't have employees. You can still apply for the EIDL if you don't have employees. The difference is that you're not going to get the grant money. You're not going to get the forgivable portion of that loan if you don't have employees. The EIDL is a loan, and there is a $10,000 grant function if you have employees. But if you don't have employees, the EIDL is simply just a loan. It may be easier and more favorable interest rates than it would be to just go and get traditional financing. So again, it's gross sales and cost of goods sold. They don't ask about operating expenses for a normal business. So it's a 15-minute application, but we don't have a ton of clarity as to how they will determine what loans you are available for.
Okay, so I do see there are some other questions, but I think some will be answered as we continue through these slides. And then of course we can answer questions at the end or follow up to anyone that we might not have an answer for. So a lot of you maybe applied for both or are looking to apply for both. So we thought it would be beneficial to go through the scenarios based on what you ultimately receive. So scenario one, you get accepted for both the PPP and the EIDL. So it's important to note that if you receive both, you can't use the funds on the same things. So we suggest that you use the EIDL for money before the loan and the PPP for that 8-week following. So again, it's important to document everything and to keep in mind that 8-week period and the forgiveness amount that Angie and Tim both discussed. Scenario 2, you get accepted for one of the loans. So I think the PPP, we went into depth with that and what that looks like. So the EIDL, like Tim mentioned, we're still looking on some of those guidelines, but it does appear that the guidelines will be similar as to what the money will be spent on. There has been nothing said about the 75-25 that has been mentioned for the PPP. But again, this is where documentation is key, staying within those guidelines. So using like payroll costs, salary and wages, sick time, group health benefits, all those things that were mentioned with the PPP, we would suggest the same for the EIDL, just simply a different time period. So scenario 3, you were denied for both the loans, or you feel it isn't necessarily in the best interest of your company to go after either loan. So in some of our other webinars, we talked about some of those tax credits. So you have the employee retention credit, which is a refundable tax credit for 50% of wages paid by employers. It is capped at $10,000 per employee. There's also the deferral of tax payments, that 6.2% Social Security tax. Our suggestion to you would be to consult with your CPA and your payroll provider to discuss these various tax credits to make sure that you are documenting everything appropriately. If you are a white glove client, we do have some things in place within our system to properly track. If you aren't a white glove client, or maybe do things internally or use a different software, you'll definitely want to look into the best way to track this so that you can get the appropriate credits. And then the final thing is that the SBA does have other loans for small businesses. You know, aside from everything going on with a pandemic, they are there to help small businesses every single day of the year. So it's definitely in your best interest, if you're considering a different loan, talk to your bank and or go to sba.gov. There are district offices in Pittsburgh and Cleveland and various contacts with the SBDC and items like that you can certainly have a conversation with someone to talk about your options. So kind of like I mentioned, there are other resources available. Of course, this goes the same for Pennsylvania or other states where people might be tuned in from. You can, like I said, you can definitely go to sba.gov and be able to pick the state that you're in, find an office, find someone to talk to. So now the biggie that everybody's been talking about, the unemployment for the self-employed. So we did go over the pandemic unemployment assistance program during our last webinar. Just for a brief overview of that, that was passed within the CARES Act. So this is something that has never happened before, that self-employed people have access to unemployment. So something to note is, while the CARES Act is a federally funded program, and so is the pandemic unemployment assistance, it will be administered by the states. So maybe you have a friend in New York and they already started getting the extra money and they're self-employed and they can apply for unemployment. If you're in Ohio or Pennsylvania, unfortunately, there isn't access to that yet, but it is coming. So what we can tell you is, at the end of last week, the Lieutenant Governor in their daily update mentioned that it will be a separate portal in which they are working on, and they hope to have it up and running by mid-May. We know that this can be frustrating for some people. I've talked to some friends that are expressing frustration because they're not bringing anything in, but we do want to remind you that this will be retroactive to when you qualified as early as January 27th. So you will be able to collect the money that you haven't been able to apply for yet. So our anticipation as far as things go right now is the calculation that you see on your screen. So again, if you don't have your 2019 tax return done, it would be in your best interest to contact your CPA and get that done so you can have that Schedule C. If you're an independent contractor with 1099s, make sure, I would suggest having all of the information for the past 18 months. As it stands right now with traditional unemployment, your base period would be for all of 2019, but some of our S-Corps and self-employed folks are asking to provide information that goes as far back as 18 months. So it definitely can't hurt to have that information ready. So when the portal's up and running, you can apply for that. In the state of Ohio and Pennsylvania, you traditionally receive about 50% of your average wages. And then the pandemic unemployment assistance also allows for an additional $600 per week. So next slide, please. I do want to point out this website, so careeronestop.org. It's been super helpful for me to track what's going on in various states and keep our clients up to date. So on the bottom left, you see the COVID-19 unemployment insurance info. That will bring you to a different screen, and you choose the state that you're in. So again, a lot of our clients are based in Ohio and Pennsylvania, but we have clients all over the country. We have friends all over the country. So you can certainly go there and check for the state that you're in and see how things work. So when you pick your state, it will not only tell you where to go to apply for unemployment, it will also give you a website on the COVID-19 updates. So Ohio and Pennsylvania's I check every day. Much like the US Treasury website, they are updating it every single day. So it's important to keep that up. I can tell you if you're signed up for our newsletters or check our website pretty frequently, we will definitely get that information out there as soon as it's available. Fingers crossed it's sooner than mid-May, but hopefully no later than that. And again, it will be retroactive. So.
Well, I think this about concludes our webinar. You know, if you have any other questions, feel free to contact us directly, and we'll be happy to address those for you. But other than that, if we are looking good on our questions here, I think we're about set.
Yeah, there's one more question coming in here. For unemployment of self-employed, what if we still are getting some business, but it has been reduced by about 80%? How do you foresee this issue?
Well, that's a very good question. What we've been trying to encourage a lot of our clients and contacts has been, there has never in the history of our country been a unemployment program for the self-employed. So they are creating this from the ground up. What a lot of us have to remember is that the tax code and the unemployment policies that we have now are the result and of decades of information and questions and policies and so on and so forth. So I would venture to guess that something like this will be addressed for the retail shop owners, for the people that obviously can't open their store, but maybe they can still sell online. That those online sales shouldn't necessarily preclude you from being entitled to some type of benefit. In the typical unemployment world, you know, there's a 20% rule of thumb. You know, as long as you're not making 20% of what you normally make, you're still eligible for some type of unemployment benefit. I would guess that there would be something like that applicable, but again, that is one that they have been pretty silent about because it has to be sent down to each state from the federal government. I know Marcy has been insanely tenacious about just following up with these people on a daily, weekly, sometimes hourly basis to try to get new information for us and try to distribute to our group as fast as possible. Because we have a ton of self-employed folks. We have a ton of retail shops and restaurants and real estate agents and barbers and, you know, all these people that need these answers as soon as possible. We're still waiting for that guidance specifically. We're guessing, our assumption at this point is that they're going to take your 2019 income. They're going to take 1/52nd of that. And that's going to be your base unemployment benefit, plus the $600 a week. But I can guarantee you that there will be a ton of different qualifications and other answers and things that you'll have to sign off on and get verified and submit when you do your unemployment application when that time comes available. That's the best guess I've got.
All right. That's good, and you're great at responding to additional questions as they come in. So last question here. I believe we already covered this. If your employees are already laid off, do they still consider you having employees, and are you eligible for the grant? So I think it goes back to that time frame issue, right?
And I think that's if that's in regards to the EIDL, I'm not sure the answer to that question. I think that Marcy, the EIDL application, when they ask for your number of employees, that's based off of the time in which you're submitting your application, right?
I believe so, but Angie, can you go back to the slides and see if it notes a date? I can't remember off the top of my head. I know when we originally applied for the EIDL for some of our clients, assisted them with that process, it did ask FTE based on a certain period of time. So I'll have Angie double check that.
But if that question is more specific to the payroll protection loan, then yes, then it goes back into that big formula of if you get back to normal by June 30th, you hire your people back at their full rate of pay, then you'd still be eligible for the loan forgiveness. Someone just asked, my laid off employees have not gotten the extra $600. Will they, and when? Marcy, you want to take that one?
Yep. So again, in Ohio and Pennsylvania, we have not seen anything specific when that will kick in. However, the $600 will be retroactive to the claims for last week. So when your employees go on and file their weekly claim, it will start calculating that. Two things I want to touch on. One, I have been interpreting from some of our contacts that the $600 will be a separate payment. So at least in Ohio and Pennsylvania. So you'll get your normal weekly earnings that they're sending you, and then you'll get an additional $600 a day or two after the day you get your other earnings. So I have not known anyone in Ohio and Pennsylvania to get it. Some contacts in Pennsylvania said next week they're hoping to start distributing that additional $600. I'm interpreting potentially in the state of Ohio that $600 maybe won't be available until that new portal is up and running. So unfortunately, we just have to wait it out, but please know and tell your staff that it is retroactive. So for the time frame where they haven't begun to distribute, they will be retroactive to that qualification date. And one other thing I want to touch on, I don't believe I mentioned, was now that a lot of people have started receiving their stimulus checks, that does not need to be claimed as earnings when you make your weekly filing on unemployment. Angie might have mentioned that in the beginning, but since we're on the topic of unemployment, I did want to throw that out there.
To keep up to date on these issues and more, you can sign up for the Business Journal. Go to businessjournaldaily.com/subscribe. It's on the right-hand side of the nav. We, of course, send out emails twice a day, morning headlines and afternoon update. We want to thank HD Davis CPAs and White Glove Payroll for huge supporters of the Business Journal and the Rally Around Small Business program, in which we are really getting behind small businesses to provide resources and strategies to help them all come out of this crisis. And would you guys like to mention, Tim, how to sign up for your newsletter? You're doing a great job providing these email updates.
Absolutely. If you go to hddaviscpas.pro, we have a COVID-19 resources section where we're posting all of these webinars. We're posting any of the newsletters that we've already submitted, and you can sign up to receive more there. We have been trying to distribute the information as soon as it becomes available to us so that we can get it into our network's hands so that they can be making the correct decision. So we've been pumping out newsletters as early and often as possible, sometimes 3, 4, 5 a week. So go to the website, get signed up, and hopefully you'll hear from us soon.
Yeah, and you get awards for subject lines because they're very interesting newsletters coming from an accounting firm, that's fantastic.
We do our best.
That's a bonus. So I will thank you everyone for joining us today. We're concluding this webinar, but there are many more to come. So just stay tuned and let us know if you have any questions.